What's deductible for a contractor or a lawn care service on their tax return? You'd be amazed the number of deductions or write-offs that contractors miss and end up paying thousands more in taxes to the IRS than they really don't have to be paying. Hi, I'm Jim Flouse. I've been doing tax returns for contractors for over 20 years. I've done thousands of returns for landscapers, lawn care services, power washers, and other home service contractors. And so I bring a lot to the table in terms of what you can deduct, how you can maximize your deductions. Please smash the subscribe button on your YouTube channel and you'll get more information from me to help you to reduce Uncle Sam's tax bite and to grow your profits in your landscaping business. So let's get started with the top deductions that landscapers are missing. And the first one starts off with vehicle expense. Trucks, autos, any vehicle that you use in your business, you can get a deduction in one of two ways. Number one, you can take the mileage rate of 70 cents per mile, or two, you can take actual expenses. So it's either the standard mileage rate or expenses. And no, you can't mix the two. You can't take the mileage rate and then add gas, or you can't take gas and then add your car payments or your truck payments. That doesn't work. It's either the standard mileage rate at 70 cents a mile or all the actual expenses. Now, I've done a complete YouTube video on this. Hit the link, you'll see more details there because there really is a secret you need to know on how to maximize your auto and truck deductions. But just think of it this way. If you drove 10,000 miles in business, you're going to get a $7,000 deduction just for your truck use. The second big area that landscapers miss is the whole subject of tools and equipment. Any tool, any piece of equipment that is customary to use, it's reasonable to use in the line of work that you do, it's deductible. Now, this can be small pieces of equipment like leaf blowers or mowers, or it can be big pieces of equipment like trailers or skid steers. The way that you deduct this is you can either expense it in the year that you put it into service, or you can depreciate it over time. Now, don't let the word depreciation scare you. It's just an accounting word, and it means that if you, for example, have a skid steer, you're going to probably use that 5, 7, 10 years in your business. In the IRS code, that's a 7-year piece of property, meaning you can deduct it or depreciate it over 7 years. Now, why do they make you spread it out? Well, the thought is that you will have that skid steer for many years. It will produce income for many years. So it's not fair to deduct it in 1 year when it's going to be productive in the use of producing income for many years. That's the theory. Fortunately, right now, there are several workarounds to depreciating equipment. Number one is something called the Section 179. Section 179 allows you to expense or just write off this year a large part of the equipment that you put into place. There's also, under the new One Big Bill, 100% bonus depreciation. So effectively, if you have a big year in 2025 and you need a big write-off, you can buy a piece of equipment and you can write it off all this year, not spread it out over 5 years for vehicles or 7 years for tools and so forth. The key with all of this is not that you take the whole write-off if you don't need it, but that you use the tax laws to your best advantage given your specific situation. Example, you had the best year ever in 2025. You've got $200,000, $300,000, $400,000 of profit after you have all your other expenses deducted. Well, then you'd go ahead and you'd take the big write-off for that big piece of equipment this year. On the other hand, maybe your first or second year in business, you're doing $150,000, $250,000, $350,000 in revenue. You don't necessarily need to write off that piece of equipment all this year. Why? Because you're probably going to keep increasing in your income, keep increasing in your revenue, keep growing your business. So you want to keep some of this write-off or this deduction for your equipment for future years, right? Year 2, year 3, year 4, your income's going up. You want to retain the ability to write that off with your equipment. So let's talk too about what is a write-off and what does that mean? What's a deduction? What does that mean? Well, it's any expense, okay? So you can deduct from your income any reasonable and customary expense, or you can write off the income, meaning just reduce it. Here's the key concept. If you buy a $30,000 piece of equipment, that doesn't mean your taxes are going to be reduced by $30,000, okay? It's not a one-for-one trade-off. Hey, I'm going to go out and buy a $30,000 piece of equipment. I'm going to get a $30,000 reduction in tax. It doesn't work that way. In reality, you have a certain tax rate that you're taxed at. Most businesses, it's 21% if you're a corporation. If you're not a C corporation and you're a sole proprietor, LLC, or an S corporation, your tax rate is going to be equal to whatever your individual tax rate is. So let's say you're in the 20% tax bracket, 20%. Okay, if you've got a $30,000 piece of equipment, how much is that going to save you in taxes? Well, you can write off $30,000 of income at a 20% tax rate, $30,000 purchase, $6,000 less in taxes. It's a $30,000 deduction, but it's yielding a $6,000 reduction in taxes. So I hope you follow. Here's another big area where landscapers miss out, and that's the whole area of advertising and marketing. Anything you expend in advertising or marketing is a deduction. Mike Andes says that the difference between a $250,000 lawn care service and a $500,000 lawn care service is their advertising budget. You know, business goes where it's invited. As you add on more overhead, more equipment, add another crew, you add on people, well, you're going to have the need to get more clients in to cover that additional overhead so you can retain your profit margin. All I mean by that is you need to have door hangers. You need to have a website. You need to do social media advertising, or at least some type of organic work on social media. And the associated software that often comes with advertising, whether it is a CRM software for relationship management with customers or prospects, whether it's email software, all of this is deductible. Go ahead and advertise, grow your business, grow your revenue, grow your profit. You can deduct the advertising and marketing costs. Your home office deduction. Do you have an area inside your home that is used exclusively and regularly for your business? Now, it doesn't have to be a complete room, but you do have to use that area exclusively and regularly for business, meaning this. Okay, maybe it's an area, you've got one of these open concept homes, right? Where everything is one big room, maybe on the main floor. Okay, you don't have to use the whole room, but you may have a portion of that room. Maybe there's an 8 by 10 area, 80 square feet, where it's just your desk, file cabinets, maybe you got storage on some tools, but that's just area that's exclusively used for business, and it's used all year long, meaning regularly. You can write it off one of two ways. There's what they call a safe harbor method, which is $5 per square foot, or there's actual expenses. There used to be fear that people would not take the home office deduction because they were afraid it would increase the likelihood of an IRS audit. Not true. May have been true 10 years ago. Congress has rewritten the rules. There's now a safe harbor in place to encourage people, and so many today have home businesses. It's just legit and right to write off that home office, and the IRS gives you a safe harbor method to use it, so go ahead and take the deduction. Here's something you may not have thought about. Any continuing education or training or licensing is all deductible expenses. So if you have continuing ed, or you need to get a certification for your work, or if you go to a convention or a trade show, often there's a trade show in Orlando or in Vegas or Nashville. Your trip to and from can be deductible. The cost of attending the trade show or the convention can be deductible, or the training if you attend a training that is put on by experts in the landscaping and lawn care industry. Did you know that anything you pay to an accountant or a bookkeeper or a payroll service or a coach or a business consultant, it's all deductible as professional fees. If you retain a lawyer for business purposes, it's a business deduction. Software and subscriptions are deductible, and there can be tons today of monthly fees on software that you're paying that you may have forgot about. $9 a month here, $15 a month there, whether it's Canva for putting together graphics, or it's QuickBooks for keeping your books, whatever. Any of that software is cost effective and it is deductible as a reasonable and customary expense in your business. What about meals? Any meal you have with a business associate, an employee, a referral source, a business partner, or a colleague, if you have a bona fide business discussion, that business meal is deductible at 50 cents on the dollar. The IRS knows you have to eat, but they'll meet you halfway. They'll give you 50 cents on the dollar if you have a bona fide business discussion. And of course, anytime you probably sit down with a colleague, a friend, a referral source, aren't you going to ask, hey, do you know anybody who needs some landscaping? And know anybody who needs lawn service? Sure, you're going to start off that conversation with a bona fide business discussion. It's a deductible meal. Don't miss it. This doesn't cover every deduction. There's probably 50 different expense categories that I'll cover in another video, but it gives you the highlights. What do you do next? What you do next is you get a professional bookkeeper to help you pull all this information together. Now, I know so many of you say, no, I don't need a bookkeeper. I'm not, my business isn't that sophisticated. It's really just simple. I keep it in my spreadsheet. Trust me, you're gonna miss deductions. You're gonna overpay on your taxes. If you have a professional bookkeeper that you pay a few $100s to, I guarantee you will save several $1,000s in taxes. If you have a tax preparer, particularly if one who's credentialed, like a CPA or an enrolled agent who's licensed by the federal government, they know what to deduct. They will save you thousands. And you may want to have them do more than just prepare the return. Where you miss it often is, where landscapers don't get it, is they think that accounting is a once-a-year event, and then it happens at tax time, and you just bring all your receipts down to the CPA and they add them up. That's a bad move. Why? CPAs are just going crazy, overworked, understaffed at tax time. They're not going to do a good job adding up all your receipts. More importantly, there's nothing you can do on April 15th to really maximize your deductions. You should meet with a CPA or a tax professional throughout the year. I recommend meeting every quarter with your tax professional to project where you're at, determine what the taxable income could be, know what kind of estimated payments to make, and more importantly, what strategies can you employ, what to do, when to do it, how to do it, so that you can reduce taxes between, let's say, July and the end of the year, or if you have an end-of-year meeting between November 15th and the end of the year. That's plenty of time to do the things you need to do to save thousands by taking proactive steps and strategies to reduce your tax. The difference between tax preparation and tax planning or tax strategy is literally December 31st. If the ball drops in Times Square, anything you do after that, for the most part, is just looking over your shoulder and taking last year's numbers and putting them on last year's return. But if you're proactive about it, then you're going to be able to reduce your taxes by being intentional and having professional help. It more than pays for itself, and it's tax deductible. So that's what I would do next, and I appreciate the time you've given me today to go over with you some helpful information on what's deductible in the landscaping and lawn care service. If you have questions, please comment. Please drop them in the comments below. Also know, I prepare taxes. My firm does bookkeeping. I work with landscapers across the country, lawn care services, to help them spend less time on their bookkeeping and more time growing their business, save money on their taxes, and build an insanely profitable landscape or lawn service. So that's it for this time. I'm Jim Flouse. Click the link below if you'd like to schedule a free one-on-one strategy session with me. We can talk about bookkeeping or taxes or what you might do to do things different and reduce your tax liability. I'm all for it. Just contact me. Again, that's it for this time. Please hit the subscribe button. I'll see you next time.